Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Hi everybody, let's take a look again at the gold market. So on weekend we said that potentially gold market is forming a very interesting price shape, but it's a situation where we need to wait a bit because we do not have clear patterns in place that are ready for trading. The potential of this situation is really great. So we have the, for example, great thrust that we discussed on the fall time frame chart, right? So potentially it might be the source of the big and great patterns, but in a weekend no patterns have been placed, so I just decided to wait. Now situation is becoming more clear, but at the same time I should warn you to be too fast in your decisions, because the real picture might be looking absolutely different compared to what you see on the charts, for example. Here is what I mean. So first of all, recall today's video on euro currency, where we talked about the dollar index, 10-year bonds, euro currency itself, that it actually has the more or less bullish background. I mean, euro, while the yields are dropping and the dollar is calling around low, so it doesn't show any big pullback. This is potentially bullish background for the gold. Yes, gold has currently big barrier in the way of the overbought. So it's definitely overbought in all time frames. It's overextended. And that probably could hold the pace of the upward direction. But even deep overbought can't stop slow upward direction. So slowly gold market is possible to keep moving higher, or at least coiling somewhere around the top. So that's the thing that we need to keep an eye on. Another moment, if you take a look at the weekly chart of the Great British Pound, for example, you could see, recall the hand shoulders that we talked about. Let's take a look. This hand and shoulder stands at the eve of the failure, which suggests possible action above the head. It's very important. Performance was on last week. Actually, that's the actual moments that I like to trade. This is a very good point for decision making when the market crashes the actually setups and give you the early sign that this setup will not work. This is also potentially bullish. So all this stuff means that on the dollar index, well, it could remain weak. And that's the reason why I'm talking about this. That's the reason why we should be maybe not skeptical, but careful with possible bearish trading stops that we could get on the gold. They might be either very short term, or it just could not work. What I'm speaking about, if you recall things that we discussed in the weekend, on the fall time frame chart we said we have the great thrust. Potentially it might be the source of the John Napoli pattern, right? It's double repo or bread and butter. Currently in this performance, for the bread and butter, it is too far because market has to reach the major 30% support. And more and everything is going in the way of the double repo, right? So we have great thrust, close below the 3x3. Now we have the close above, and preferably it should be equal or slightly higher second top. And then we need to get the collapse to get the second close. That will be the confirmation of this double repo pattern. So currently, we are not entering any short positions, despite that you could think that this is probably the shape, and you think that you could take position earlier than see how market will flirt here. It's very dangerous. And I explain why. Very often, the wrong double repo patterns becoming the triangles. So for instance, if you will not have significant second top, or you will not have the second top at all market, although it gives the second close above the 3x3, but this is not the shape of the double repo. And you could get something like this. That will be absolutely different story. Despite the nominally market could complete some conditions of the double repo, By the nature of the price performance, this is not the double repo, this will be the consolidation. For the double or penetration, which is the double repo actually, you need to see the failure, the actual capitulation of the bears. When the bulls, when the bulls are trying to push price for the top and failed. That is the major idea of the double repo. But here you can't see it. You can't tell this. It's probably just a consolidation. But that's what we see on the 4-hour time frame chart. Now, if you take a look at the hourly chart, or better on the 30-minute chart, here as you could see just better. You could recognize the shape right on the top. So I'm not exclude that this might be this type of action. Here's might be the shoulder, head, and another shoulder. So the reverse hand and shoulders might be formed on the top, suggesting upward continuation. Could these hand shoulders become a part of the double repo on the 4-hour time frame chart? Well, difficult to say. It might be, but the target of the hand shoulders seems to be too extended for the second top of the double repo. It's more probable, based on all the ground that I have mentioned in the beginning. Recall what we talked about: dollar index, Great British pound, euro. Appearing of this pattern might suggest possible challenging of the top and some ability to or attempt to move higher as far as gold could right now, based on its overbought situation. So that in towards what we have. That's why in the beginning I said that the picture might be looking absolutely different and not as it seems on the first glance. So currently the major conclusion of this video is that despite that you could recognize the possible shape of the double repo or kind of the double repo on the 4-hour time frame chart, don't hurry up to take the short position. It might be really costly and might be wrong direction. So the answer is potential reverse hand shoulders here. Currently we need to wait slightly, just a bit more, a little bit, to get the completion of the patterns that we're watching for. Now we finally at least have some clarity what the patterns will be, and let's market give some time to complete them. Then we will make the conclusion on the direction.